Live reaction now from Sensei, our chart analysis expert, our crypto man, our chart man. Love having Sensei on the show. We've just been covering the FOMC report. We've been going since 3 o'clock this morning, 12 hours all the way through, the longest stream I've ever done. Since the last longest stream I've ever done. And we've got Sensei live on the show. So let's get an opinion from Sensei and see what he feels about today's moves. Sensei, welcome to the show. How are you? Good to have you here.
Thank you for having me on the show, Martin. What a day.
What a day indeed. 0.5% rate cut. Well, I was right on one hand. We got a rate cut in the summer of 24. However, it was a 0.5, not a 0.25. So I can't gloat too much. I wasn't spot on there this time, but nevertheless, what do you make of it all?
Yeah, I mean, it's good. Rates are coming down. I think that's a positive. But there's a big but for me. And that I know,
I'm worried about this now.
The but is it's a 0.5. Initially, lots of people would say that's good. If we got a 0.25, I'm sure the initial reaction would be much worse, and we might be down 1 or 2% right now. I think somewhere in between a 0.25, 0.5 was priced in. However, if we got a 0.25, I think the markets would have come down a lot quicker, a lot faster. But there's different concerns with a 0.5. In the case of a 0.25, I think the markets would have come down quickly and recovered quite quickly. Just because the initial reaction would have been a panic because it didn't come down fast, and the retail traders would have wanted it to come down quicker. But it would bounce back. However, with a 0.5, it sets the tone that the Fed is panicking. The 0.5 is quite a big deal. It's quite a big deal in terms of interest rate cuts or rises in 0.5, and that, in my opinion, is just unfortunately it sets the tone that the Fed are panicking behind the scenes. Just listening in to Fed Jerome Powell as well, in my opinion, his tone and the way he was speaking, it was a bit incoherent with what he was saying. Some things he was contradicting himself. Sometimes he was speaking in a way where he wasn't calm and composed like we saw him when he was raising rates 0.25 every time. He seemed very calm, composed, knew exactly what he was saying, taking it slow, reacting to data. Whether or not that data was a bit lagging, I'm sure it is. But he had a persona which was very calm. In this meeting, I think he was, in my opinion anyway, he didn't seem on form. He seemed a bit panicked in how he was speaking. Things weren't lining up exactly. With him saying everything's fine and then saying, but we did a 0.5, which is kind of reactive. So it's just what's happening behind the scenes. I'm not sure. It just seems it's a bit of a sudden reaction, which in the long term for the market, week, I think, as we can see, the markets popped up and then came down. When the pop in price, I believe, was the retail getting excited. Some people call that dumb money, but let's just say it's the retail getting a bit excited, getting over leveraged, and then maybe the larger fund managers taking opportunity of that high liquidity, that high amount of leverage, and bringing the markets down, causing sort of liquidations of the retail investor. That's going to be on the short term. In my opinion, over the week, there's going to be a lot of trading. Over the longer term, which is more important, we're going to see how this affects the economy, and how fund managers are going to digest the news of a 0.5% rate cut. So no one can predict the market. It's just, for me, what's concerning is the level of panic this might cause, and the level of panic in what he said in his tone and how he was speaking in this meeting. I'm not sure if you noticed that, Martin. Did you see anything different to how he was speaking, or do you think he was?
Well, it was different. I've been listening to him now for nearly 3 years. I wasn't covering the FOMC the first few weeks of doing my show, but nearly 3 years I've been listening to him. I did see a difference, but then we've had rate hikes all the way through. Now today was different. So I've got nothing to compare it to for, cutting rates. So I'll be learning as we go on in the future. So I don't really know. I didn't sense the nervousness and whatever like you talked about. But you touch on the point that and I've been saying this all day long. In fact, I've been saying it for weeks. Do not chase this. Do not chase this. And, like, when you see the markets go up, someone's buying it, which means, that's great, because I bought the S&P when it was when it was like 365, I think, some of it. And now we're at, sorry, not 365, 465. And now we're at 520, whatever we are, 519, at least we were an hour or so ago. So it doesn't bother me, but people shouldn't be chasing this. They need to let it settle, take their time, let it settle. So I do think there can be some trading, but you see, I was never looking at today. I was always looking at the next earnings in October. I was looking at the businesses, how AI is going to change the world, how Nvidia, when it brings its Blackwell chips out, how it's going to ramp up profits, how Google are paying more to me in CPM rate on YouTube because businesses are paying them more money to advertise. So the general economy is good. I think we're okay. But again, everyone's position is different. You're not okay if you've just borrowed a bucket full of money and you've gone over margin and over leverage and you're all in on one stock and you've just chased it up. Then you're not okay. But I'm okay. I'm perfectly happy with my position. I'm happy, but I can wait 6 months now for the rates to slowly come down. And even though I said 0.25, and I get your point, 0.5 looks like a panic, a reaction. We have to remember we are coming into an election. And there is politics flying around behind the scenes. We don't know what. We can predict all day long what the message was there. But if we're going to do a 0.5, which I didn't want to see, but if we did a 0.5, then to do it on the first call and then go 0.25, in my opinion, is a good idea. If we'd have gone 0.25 today and then thought, oh, it's not enough, that looks like we're not in control. That looks like we're adjusting. Because if you think about it, when we started raising rates, it was the other way around. We start big, we get smaller and smaller and smaller, then we pause, and then we start coming down. So we start big and then we get smaller and smaller and smaller. That's how it works. So I even though I didn't want a 0.5, I'm okay with it if we follow it with a 0.25 steadily, no knee-jerk reaction. I think we're going to get that. I think the market's going to be okay. So I'm not as bearish as you are. I do think there'll be some selling off. There'll be people panicking. There'll be people buying too much on the way up. There'll be people selling too much on the way down. But I think the businesses that we own, a general economy, if you're not chasing it, you'll be just fine.
Yeah, I agree with some points. I agree with the point that over the long term, this is still bullish. Rates are coming down. We shouldn't look at it over sort of weeks/months. We should sort of look at it in multiple months and really years. And that's what I love about the show and what you're teaching. Again, it's not financial advice, but we can look at statistics. People that day trade. Anytime you sign up for a trading platform, the statistics they throw at you are scary. It's 95%, 90% of day traders lose money. And what you're trying to show to, I'm sure, a lot of people that come in for the first time, they might be losing money every day, or they might be losing sleep. I'm sure, I think me and you have lost sleep over trades when we first got into the markets. And we've learned from that, and we've discovered that long-term investing is probably the best way to go about it. So for us, looking at it in the long-term horizon, I think we're fine. For the people that have just joined the channel, never seen it before, or the people that have just become members, I think that they're understanding that there's a different way to make money. It's not a get-rich-quick scheme, the markets. There's no such thing as a get-rich-quick scheme anywhere. The casino is probably your best shot at that, rather than trading, because that might put you off investing in the stock market forever. But the facts are, if you're day trading, you're much, much more likely to lose money, especially if you're doing it with leverage. And once you come on the show, you can see the real way of investing, the much safer way of investing. Again, not financial advice, but statistics show long term in the market, you always recover from anything. And I think that's the main takeaway for anyone who's panicking about what's happening today. We can disagree on where we think the markets will go over months, but I don't think any of us disagree, especially not me and you, where we think the market's going over years, and that's what's important. That's what we're trying to teach people.
Yeah, exactly. You make some good points there, and I want to add to that is, like you mentioned dumb money at the beginning, when suddenly everybody got excited and started buying. As you say, retail investors can do that. Whenever I speak to anybody with real money, millionaires and a couple of billionaires that I know, it's all about income. I know that sounds really boring and nobody wants to hear me say that and go, oh, it's all very well for you. If you've got $1 million, it's easy to make money. Well, yeah, it is, I guess. If you've got $1 million and you just get 5%, or you own the S&P and earn 10%, that's 10 grand, 100 grand a year. That's more than most people earn. Brilliant. However, you've got to get to there. No point, being put off by that because I haven't got any money. I can't get there. You've got to think the way money thinks, right? And if you think like a poor person, you'll be a poor person. If you think like a rich person, you'll become a rich person. It takes time. Everything takes time. Leave the seeds in the ground and give it time. But what does big money do? What does real money do? Those with millions and billions, they're quite happy earning 5% in Robinhood. They're quite happy earning 10% on the S&P. That's a lot of money. If you've got $1 million, it's 100 grand a year doing absolutely nothing. I mean, that's not bad, is it? So, so how do you get there? Well, you can put the same policies in place with $1. You just got to do it for a long time. Now, if you're 20, 30, 40, you're still very young when it comes to the long-term position. But, people need to slow down and have patience and think. I often talk about Warren Buffett. He's not the greatest he's not the greatest trader. He's not the greatest investor. There's many trades, many opportunities he missed. Often talks about the opportunities he missed and didn't get in a lot of tech companies that went on and boomed. Yes, he did Apple, but there were many others that they missed. Warren Buffett is just a very old gentleman now, and he's done the right thing for a very long time, and most of his money was made after he was 60. The doubling effect and the compounding effect. So, you've got to just look at what your objective is. If your objective is, I want to get rich right now, this is a bad place for you. You shouldn't even be in a casino because the house always wins, right? Statistically, the house wins. So getting rich now is a bad attitude to have. If you are happy to make some sort of profit, no matter how small, but you keep doing it. I always like to say this, and I realized recently, it's a quote from Warren Buffett, and I never realized until someone told me. Rule number 1, don't lose money. Number 2, remember rule number 1. And since January, when I rebalanced my portfolio and went all in on the S&P, I've never lost a single penny any single day, ever. I wake up every day, do my job, whatever job it is for you, earn a couple of bucks, earn $1, earn $1 million, whatever, but take that money and make that $1, that 1 cent work for you. Just keep doing that day in, day out, and never lose money. And that will ultimately be better for you than one day I win, one day I lose. And I'm going to use MSK as one of our friends as an example, and he won't mind me saying it. He made huge amounts of money earlier this year, went all in on his money that he made with Fisker, lost the lot. Doesn't mind me saying it, we're good mates. And he ended up back where he started from. So if you just do the right thing consistently over and over again and refuse to lose money, you'll do well over time. But focus on your income. You have to have money to invest. And I don't mean if you haven't got any money, you can't, but $1 is enough. But focus on earning money and then what you do with that money. And I'm glad you're here because we're talking about this now. Somebody misunderstood yesterday, and I want to put this into the video. One of my members basically called me a liar. He said, you're stretching the truth. And unfortunately, he's unsubscribed, he's unfollowed, the rest of it. Because of his lack of understanding, he misunderstood, and now he assumes I'm a liar. Basically, what he was saying was, I was explaining yesterday my 5,000 to 114,000. Oh, you can't have possibly done that. You only make 10% a year on average on the S&P. It's not possible. That's what he was saying. And I was saying, well, first of all, right, You're not calculating all the macro dips of sudden 10% drops and buying those drops. They're not built into the 10% a year. Those are extra. Number two, you're not calculating margin, so which amplifies my losses and my gains. That's another thing. But most importantly, he said, well, obviously you're using margin, so you've just borrowed money to put in your portfolio, so you've got more money. As if I'd gone to the bank, borrowed 100 grand, stuck it in my balance, and now I've got 100 grand. And look at me, I've made 100 grand. That's not how margin works. You know that. Most of my viewers know that. But he thought, that's how you've gone from 5 to 114. You just borrowed 100 grand. So, Sensei, you will be able to add to this perhaps in a way. When you use margin, you can borrow $1 million or $1 or more or less, whatever you like. That doesn't show in your balance. The profit and the losses show in your balance. As you pay off the margin with your own hard-earned money, I go back to income again. Income is what's important. I will be paying off that margin. That doesn't mean to say I don't own those shares. I own those shares, but I only show the profit and the loss of those shares. The balance is not included. Hence why I show the big screen where I show I've got 200,000 invested, even though I'm only 114 in my balance. And that's how margin works. And it's very, very important. A little bit of knowledge can be very, very dangerous because we live in a skeptical world and everybody exaggerates and lies, and we see it all the time. We're in the middle of an election now. There's lots of lying going on. And people assume, it's got to be lying. No one can make that sort of money. Because you don't understand something doesn't make somebody else wrong. You need to say, hang on, I don't understand. Can you explain it to me? So yeah, I just wanted to add that. People get very confused with margin and how I've gone from 5 grand to 114, like it's some magic trick. I'm the greatest trader in the world. It's completely transparent. It is what it is.
You've been live every day for it as well.
Yeah, so you can see it. I mean, when I get paid on Monday, because it's the 23rd this week because of weekend in the way. I normally get paid on the 21st. Because it's a Saturday, I'll get paid on Monday. You will see how much money I earn on YouTube. I don't know anybody else who tells you their income, but I do. And I will put it in to Robinhood and you'll see my balance go up. So you'll know how much I've put in and you'll see. And what will happen is, if I put in 1,000 or 2,000, what it will do, it will go up. My balance will go up and my margin will go down. That's it. So, you can see how I'm growing, but investing and making money isn't just join the casino. It's enter the market when you are in a financially good position. You don't have to be rich. $1 enough, but you need to be doing it once you've got your debts managed. You don't have to have no mortgage because otherwise most people would never start investing. In my case, I don't have a mortgage, but you can have a mortgage, but it's not over your head. You haven't got a Ferrari in the garage, which you can't afford, and you're over your head. You've got debts. Get yourself straight. Get an income, no matter how small it is, then invest. And it's all part of it. And building a portfolio is not just play the casino like a slot machine, a fruit machine. You have to have some level of income, no matter how small, but it's very important. And for me, my business is YouTube. That's how I earn my money. But it's very small part of what I have made. I have made more money this year on the growth of my portfolio than I have earned on YouTube the entire couple of years I've been earning money. Like the last year and a half I've been earning money.
Yeah, I think you've raised some good points there, and I think it ultimately depends on each person's situation, which is why we don't give financial advice. But I mean, for someone who's young, I can see the appeal of risk, and I guess you can take on more risk. You don't have dependents, you don't have a mortgage, you don't have debts. Okay, you can take some more risks. You can have 25% of your portfolio where you try and buy the dips at specific areas and sell at specific areas. You can put 10% of your portfolio in crypto. You get a bit older, you have kids, then your risk needs to be off. You can't go too high risk, and then when you get older again, and your kids have gone to uni or whatever, you've paid off all your debts, you might still have a mortgage. Then at that point you can be a bit more risk on, which is why I imagine yourself in a situation where you have taken on some extra risk. You've got the margin. albeit quite a safe option of the S&P 500, but you have taken on some risks. So everyone's situation is different, which is why we can't comment on every person's, why we can't make statements for each person. But I think what we can comment on is long-term growth, investing in the stock market, especially with no margin, especially when you've paid off most of your debts. Then that is an easy way to get rich. It's not a get-rich-quick scheme. It doesn't happen in a day. It doesn't happen in a month. It doesn't happen in a year. But over 5-10 years, you can see some amazing gains. I mean, I don't think you'll mind me saying this, but the amount you make from YouTube isn't what's made you go from 5,000 to 115,000 in about
not a chance.
2 years. So I think, I mean, people have been following a journey. Some people are more new than others. But the members know that what that money's come from, a little bit of income, and mostly from gains. So for someone to say that it's just basically borrowing money from the bank and slapping in your account, that's the opposite of how it works, and there's no way anyone can just do that, and that's not how it works anyway. So that's a bit ridiculous. But I mean, going back to what's happened today, the only other concern I see is, I remember you mentioned about the 0.25 increases, and beginning with a 0.5 increase. I think back then we can agree that they were quite reactive because inflation was coming up quite quickly, which is why I think they went in with the 0.5s to begin with. Because they were reacting to how bad inflation was getting, and it was a very reactive approach coming up 0.5%.
And we were historically low rates at that time.
Yeah,
we could afford to jump quick.
Yeah. So they could go up quickly, but this time round, they were supposed to be cool, calm, and collected. And there shouldn't have been a reason for them to suddenly come down. Back then, there was a reason for them to go up 0.5% quickly. Right now, with the way they're speaking, the way they've spoken, and what they were expecting, they shouldn't have had to go 0.5% down. Maybe they took rates up too much, which I believe. Maybe they held rates for too long, which I also believe they did. But now I think that they've realised their mistake, and they're bringing it down in sort of a panicked way. That's my final thoughts on that. In the long term, it won't have too much of an impact. But things we need to be keeping an eye on is inflation going to get to 2%? If it doesn't get to 2%, then that's going to be worrying because they're already bringing rates down in a panicked way. And the other thing we need to look out for is what's the other? So inflation needs to come down, and I don't know what the other thing is, but inflation's the main thing. We need
that happens to me normally. Yeah, that happens to me normally. You're too young to have that problem, mate.
I guess inflation is the most important. So hopefully inflation keeps coming down. And I guess, I mean, that will all play a part with all the wars going on. So, I mean, anything can change the direction, but as long as the next meeting, and as you say, earnings is quite important. So earnings might be bad this time around because this will be the longest they're going to be felt the high rates. They're not going to be feeling these 0.5% cuts, so we might have a bad earnings season upcoming, in my opinion. But after that, as long as we don't see more panic from the Fed, as long as so the other, I remember the other point was labour markets. If they suddenly get out of control in terms of unemployment, then inflation might be going up, and labour markets unemployment might be going up as well, which would be a serious concern. So if we see any data points leading to that, then that's another warning. But I put out my warning last week. You can watch that video where I said rate cuts don't always mean a bright couple months, a couple years ahead. But long-term investing is what we're trying to show you guys here, and I think over the long term, this will not be a problem. This will actually be bullish for the long term.
No, you make some great points there, and remember, we're at historic high levels right now. 0.5% isn't going to change the world tomorrow. People can overreact and think it should have pumped today, or they think it should have sold off today. Whatever people think about it, it's just an emotional knee-jerk reaction. It's not going to save you if you've got a high mortgage or a car loan or anything else. And these effects are still putting pressure. We've still got high rates. We're still putting pressure on people. It takes time. Most people who could get some benefit from the mortgage rates, they've got fixed income, fixed rates, and they have had for years. They've not even felt the rates go up, let alone coming back down again. So all these things have a lagging effect. And as far as I'm concerned, today just shows we're now moving in a positive right direction. The worst is behind us, and let's remember why we're here. Because of COVID, an epidemic. It changed the supplies around the world. We had massive shortages, massive amounts of problems and insecurities and all the rest of it. Everything else, wars and everything else, these things happen all the time. We've had two world wars, and the economy has come through it and gone on to be better again later on. So we've been through situations like this. We've been through the dot-com crash, the housing crisis, the depression of the 30s. We've been here many times before. This isn't new. This is not a surprise to anybody. It looks like you've frozen there on your camera for a moment there, Sensei. Don't quite know what's happened there. I don't know if I've lost Sensei. Let's see if he just calls in. I was just going to wrap this video up and I lost him. But let's see if I can just finish it up. If not, I will end the call there. Oh, there he is. There you go. You're back on again now. I was just going to wrap up then for a moment, but that's great. Not a problem, no. So at the end of the day, this is no big deal. If you are a long-term investor, this doesn't mean anything at all to you. Quite honestly, if the markets go sideways for a while, that means I'm not buying. I'm not selling. I wouldn't be selling anyway, but some people would be. If we're going sideways for a while, that's just paying off, more margin. And then, we could get 2 months of sideways action, 2, 3 months, 4 months, whatever. And then just before we take off for the next leg up, which is how it works, a bit of a sell-off because people often sell into good news because they go, things are about to get better. So let's dump the market, buy it back. Perfect for me because I'll just go month after month after month, margin coming down. Oh, we're about to get good. We're about to get a good earnings call. Nvidia are about to go $200. The markets are going to go up 10%. But just before they announce it on the earnings call, everyone dumps the stock. Boom, down it goes. I buy some more with my margin. By now, my margin's been reduced by maybe 10 grand or whatever. Buy some more, bring me back up to where I was before, but now I own more and it's straight back up again. We've seen it before. Remember the incident when we had the 10% Amazon crash? 1 second it went down, straight back up again. Nvidia could do that. And remember, because of tech and the carry trade and the unperfect earnings, we've already had Nvidia sell off a lot from where it was. The next earnings is going to be good because we've got Blackwell, but it doesn't have to be outstanding because we've already sold off a little bit. Still think it's going to go $200 within 12 months.
Yeah, I agree. I mean, I think with every single time the market sort of shot up, there's always been that crash down. It happens more in crypto. It happens all the time in the stock market as well. And that's why every time I do my videos on a Sunday, I've got these levels, which some people say that's crazy levels. We're never going to get there. For example, Nvidia at $70, $80. Some say we'll never get there. I mean, maybe we never do. But if we do get the opportunity to buy these stocks, these great stocks, I've had buy zones for Coca-Cola, J&J, Amazon, Meta. Remember that Meta trade where we bought it?
Wasn't that brilliant?
$60 stuff like that happens. So if you manage, I always say just have best case and worst case scenario in mind. Best case scenario, okay, you make some money at good levels to take profit. Worst case, you have some limit orders to buy it, so you can make even more money. Those situations always happen. Crashes always happen, and those are where you say all the time, recessions are where millionaires are made. So having money, having some margin on the side, having some cash, depending on your risk situation. If you can't afford to have margin, then have cash on the side. If you can afford to have margin on the side to buy when these dips come. Maybe they're more unlikely to come. Lots of the time that these buy levels do come in play, especially if people panic sell, which always happens in the market. There's a lot of reactions going on. So every Sunday, I do my show. I show the limit orders of the
hold that thought, because as we wrap this up, that's exactly what I want to do. I just want to tell everybody here on Sunday, after this now, we're going to have a couple of days of horse trading. then you want to prepare for next week. Here is Sensei's show. Sunday night live, all members can have their own personal charts. Sensei will do a chart for you, asking what you want about the upcoming week. He will make a chart for you live, answer all your questions, and then late in the evening for Sensei, he will finish it up, send me the video, and then I will put it out ready for Monday morning. So it will go out Sunday night, so you are ready for Monday morning trading. So Sensei, just to wrap up the show, I want to finish with you. What can we expect from you on Sunday? Why the guests should tune in, why our members and guests are tuning to you on Sunday, getting ready for next week? Because obviously we just had this report. Now we're going to have the big week next week, a lot of trading going on. What can they expect from you on Sunday?
Yeah, so this Sunday we're going to be digesting what the Fed have, key points that have come out from the meeting, looking at how the S&P 500 has reacted. So we're going to be doing a full analysis on the S&P 500, the chart, saying, are we still in the bull market, or is this a point that there could be a turning point on the bearish side of things? So we're going to have a full deep dive of the S&P 500. We're going to do a full chart analysis on Nvidia, where we're going to be looking at specific levels. We have just dropped below, we are below the $116 level, which was quite key for this trade that we're in. We have been seeing lower highs on Nvidia, and sort of $100 might be the line in the sand. So we're going to look at potential trades for Nvidia, and if that's looking bearish like it did last week, so we're going to do an updated chart on Nvidia. So if you are interested in Nvidia, then do join the Sunday show or look out for that video. We're going to be looking at gold and oil again. Gold just hit all-time highs, $2,600 today. So we're going to see if that trend is going to continue to the upside. We'll also be looking at all your chart requests as well. So if you do join the video now, go on the live stream, and then type in your request for your chart, so you can see specifically what I think about your chart, specific resistance and support levels. Again, nothing I say is financial advice, but I'm here to serve the members. If you're a member, I'll be doing your chart analysis, your specific requested ones as well.
Brilliant. Brilliant. Sounds like an exciting show, of course, on Sunday. And Sensei, you'll also be doing your favorite crypto as well, something you are very, very good at and have a great deal of experience in. Sensei, thank you very much for tuning in late at night. Love to your wife. Only been married for a couple of months now, and we appreciate your time. Sensei, thank you as always.
Thank you, Martin, and I'll see you all on Sunday.
Yes, indeed. There's Sensei calling live into the show from the United Kingdom. Absolutely wonderful. So if you'd like to join Sensei on Sunday and have those charts and all that information getting ready for the upcoming week, then please do so. Tune in. I'll give you all the links above my head, down below in the description. I'll put the show there, and I'll also put it over here as well. This is Sensei's chart show on Sundays. The chart show. It's like the bloody Top of the Pops. No one remembers that. Anyone under the age of 50, under the age of 50, yeah. Anyone under 50 is going, Top of the Pops? What's he talking about? The chart show Sunday night when you get number one. Except we do number one stocks rather than number one Karma Chameleon. Now you definitely don't know what I'm talking about, do you? All right, over. I'm that old. Yeah, you'll all be here one day. Click above my head or over here for that, and down here I'll put some more videos that you'll find useful. What a great interview that was. Thank you, Sensei. Until next time, as always, take care of yourselves and each other.